Welcome back, you insightful listeners, to another edition of Bookish Dives.
Hey, everyone. Great to be back.
We've already had a couple of fantastic journeys into compelling reads, haven't we?
We definitely have.
And today, we're taking a closer look at a topic that really sits at the very heart of innovation and economic growth.
Yeah, the high-stakes world of venture capital.
Exactly.
And for this exploration, we're cracking open Jeffrey Bussgang's Mastering the VC Game. A venture capital insider reveals how to get from startup to IPO on your terms.
Mm-hmm.
And it's not just like a step-by-step guide. It's more a fascinating look behind the curtain.
Right.
It shows how entrepreneurs can, navigate this world, not just to get the funding.
Which is hard enough.
Totally.
Yeah.
But to really forge true partnerships with investors and, well, build something genuinely incredible.
And partner is such a key word there, isn't it?
It really is.
So our mission today really is to distill the core wisdom from Bussgang's pretty unique perspective.
Yeah, he's been on both sides, right? Built 2 startups himself successfully before actually becoming a VC. So he gets it from the ground up.
Absolutely. So you'll walk away with, hopefully, a shortcut to understanding the insider game. It's packed with surprising facts, practical advice.
And just a clearer feel for what motivates everyone involved, both sides of the table.
Exactly. So whether you're maybe dreaming of building the next big thing or you're just curious about what makes these economic engines tick, this examination is definitely for you.
All right, so Bussgang kicks things off by challenging that common idea, and that entrepreneurs are just in it for the money.
Right.
If it's not just the cash, what does he say is the real driver? The
Yeah.
surprising one, maybe.
Yeah, it's absolutely not just about the money for most. His core insight is that true entrepreneurship, it isn't just spotting a market gap. It's almost like an irrational compulsion.
Yeah.
He calls it a deep-seated itch, a profound, almost unshakable desire to change the world.
An itch? I like that. He uses Reid Hoffman's analogy, too, which is pretty vivid.
Yeah.
An entrepreneur is someone who will jump off a cliff and assemble an airplane on the way down.
Wow, okay. That's commitment.
Exactly. Think about that level of commitment and improvisation. So for you, if you're maybe an aspiring founder, the takeaway is huge.
Find the itch.
Find that intrinsic itch, yeah. Because that deep desire to change something, that's what's going to sustain you through all the chaos, much more than just the promise of a big payout.
Makes sense.
He even talks about his own father, a Holocaust survivor who built a successful high-tech company without any outside capital. That sparked his own drive.
And Bussgang really brings this itch idea to life with some fascinating profiles, right? Can you walk us through maybe 1 or 2 of those examples? What details really show that deep motivation?
Oh, definitely. He profiles people like Christoph Westphal of Certrus,
Coker.
Jack Dorsey of Twitter, Reid Hoffman of LinkedIn. Their stories are pretty remarkable.
So Westphal, what was his itch?
For Westphal, it was apparently a scientific article in Nature magazine. It sparked this vision of creating a drug to extend human lifespan, keep you young.
Whoa, that's ambitious.
Totally. That wasn't about a quick flip. It was about impacting humanity.
And Dorsey, before Twitter.
Yeah, for Jack Dorsey, it was this lifelong fascination with mapping real-time movements, how things move in a city.
Interesting.
Which led him to start a bicycle courier service. Not because he loved couriers, but just so he could write the dispatch software for it.
Get out. Seriously, he built the business for the software.
Yeah. Imagine that dedication, creating the whole business around the software he wanted to build. Kind of backwards, right? But it shows the passion.
That's a fantastic illustration. It almost sounds like, obsession, doesn't it?
It really does.
Yeah.
And what's fascinating is that underlying passion, often deeply personal motivation.
So Dorsey didn't start Twitter just to get rich.
Nope. He wanted an easy way to track his friends' activities, see what people were doing, almost like an abstraction of how cities work, how info flows. And Westphal, his incredible optimism was apparently coupled with this raging fear that everything will go wrong.
Which sounds bad, but VCs like that.
Paradoxically, yes, because it shows a realistic grasp of risk. The founder isn't just blindly optimistic, they're critically aware.
Okay, that makes sense.
These individuals are driven by changing the game, not just making a buck, often thinking of it as a way to make a big, maybe even altruistic impact. It's that entrepreneurial itch that just has to be scratched.
And VCs look for that authenticity.
Exactly.
So, okay, you've got that profound, maybe slightly irrational itch as the foundation. But for most big ideas, that vision needs fuel. Serious fuel.
Right. Capital.
And Bussgang then takes us right into the engine room, pulls back the curtain on what he calls the exclusive VC club, which sounds, well, both alluring and kind of intimidating.
Yeah, that's a good way to put it.
Yeah.
He very aptly calls them the 1,000 deciders.
1,000. That sounds small.
It is. Imagine only about 1,000 individuals globally, really, making the investment decisions for companies that, well, back when the book was written, accounted for over 20% of the U.S. GDP.
20%. Wow.
It's an incredibly small, tightly woven club.
Yeah.
Mostly male, often from just a handful of elite universities, Harvard, Stanford, you know the ones.
And concentrated geographically, too, right?
Oh, yeah. Silicon Valley, Boston, New York. Primarily. And this isn't just like a fun fact. It's a huge insight into the power dynamics you, the entrepreneur, are dealing with.
Access is everything.
Totally. It underscores why you need to navigate those networks carefully. And it highlights the immense responsibility these few individuals have, deciding which innovations get funded, which tech defines our future.
It's a very specific kind of role he describes for them, too, not the star of the show.
Right. He paints VCs as more of a backer of a movie in which he never stars.
Okay.
They prefer being the enabler, the facilitator, not the builder, not the one taking the bows.
So it's an intellectual adventure for them.
Definitely. Exposure to brilliant ideas, disruptive tech, but, he notes, often with a greater emotional detachment compared to the entrepreneur's absolute roller coaster.
Right, the highs and lows are different.
Very different. And understand that separation of roles is really key to understanding their perspective, which absolutely raises a big question for any aspiring entrepreneur. What kind of companies do VCs actually fund, given this mindset?
Yeah, because they're not just funding any good idea that walks in the door.
No way.
Yeah.
They're looking for breakthrough, game-changing potential, something with massive scale.
Big swings.
Big swings. These ventures typically need huge amounts of capital, and they're often tech-based, involve hiring expensive talent.
And might not even make money for years.
Exactly. Sometimes years. So the VC's role isn't just handing over cash, it's active participation. Strategy, recruiting key hires, business development, helping secure the next round of financing.
And they usually take a board seat.
Almost always. To guide the company. So they're definitely not passive investors. They become deeply involved partners, even if they aren't running the day-to-day.
Okay, so with that understanding, the entrepreneur's drive, the VC's strategic view,
Yeah.
the next logical step is that make-or-break moment, the pitch.
Ah, yes, the pitch.
Bussgang makes it sound pretty dramatic. This is where dreams often live or die, right?
Yeah.
What are the odds here? How tough is this stage?
The odds are, well, they're brutal.
Yeah.
Bussgang says VCs invest in only about 1 out of every 300 companies they see.
1 in 300. Oof.
Yeah.
Yeah.
Think about that. Your company has to be truly exceptional just to get past that initial filter.
So how do you stand out?
Well, preparation is everything. He shares his own early pitch experience. For Upromise, pitching John Doerr at Kleiner Perkins. A bit painful, he calls it.
Even though they got funded eventually.
Yeah, they did. But he learned the hard way about not having a complete grasp of the financials. He assumed his co-founder did. The co-founder assumed he did. You know?
Oh, boy. That's
Yeah.
awkward.
Very. The lesson is absolutely paramount. Prep. Know every number, every detail, anticipate every question inside and out. VCs expect that mastery if you're asking for millions.
He shares some great stories about pitches, though, right? Really highlights the human side of it all.
Oh, yeah, some classics.
Like the CEO who clipped his nails during a pitch.
Yeah. Clipped his nails during a pitch to David Hornick at August Capital. Can you imagine?
No, and he still got funded.
Apparently.
Yeah.
Because the idea and the rest of the pitch were just that strong.
It's hilarious, right?
Almost counterintuitive. It shows that while professionalism matters...
Substance can sometimes win out.
Exactly. Sheer brilliance, clear vision can sometimes overcome, well, weird behavior. But it's a fine line.
Because there's the other story, too, right? The dog.
Yes.
Yeah.
Fred Wilson's story. An entrepreneur whose dog, Sophie, crashed right into the conference room window during the pitch.
Oh, no.
Yeah. Ended the meeting pretty abruptly, and maybe not surprisingly, they never got funded.
Okay, so maybe leave the pets at home.
Probably a good idea. It highlights that while VCs look for genius, they're also assessing your judgment, your ability to handle the unexpected, whether you get the gravity of the situation.
Makes sense. So what's the key advice, then? Be honest about risk.
Totally. Bussgang advises against overpromising. He quotes Christoph Westphal again, who apparently told VCs, the odds that I'm right are less than 10%, but if I am right, This is really big.
Wow, that's blunt.
It is. But VCs know there are risks. They want to know that you know them, that you've thought them through. It shows realism.
And they value tenacity, too, resourcefulness.
Absolutely. And that often shows up right at the start. How did you get the meeting? Was it a warm introduction through a trusted contact? Or just a cold email?
So getting the meeting is already part of the test.
Often, yeah. That warm intro is frequently the first kind of unspoken test of your ability to navigate the market and build networks.
Okay, so let's say you somehow beat the odds. You survived the pitch, you secured the funding. What's next? Bussgang talks about actually doing the deal and then the long haul of building the company.
Right. The real work starts.
How does he break down that growth journey? Because it's not smooth sailing, usually.
No, definitely not. He describes the startup journey in 3 distinct phases. And the analogy is great. First, you're in the jungle.
The jungle, okay.
Yeah. No set path, just initial buzz, lots of uncertainty. You're basically clearing your own way, hacking through the undergrowth.
Got it. Then what?
Then, as the company starts shipping product, maybe getting some revenue, it transitions to the dirt road.
Okay. A path exists, but it's rough.
Exactly. It's still bumpy, unpredictable, demands constant attention. And finally, if you're successful, it evolves into the highway.
Highway. So profitable scaling.
Right. But with that growth comes less maneuverability, more established rules of the road. It's a really powerful way to think about the evolving challenges.
And all along this journey, the jungle, the dirt road, the highway, the board of directors plays a huge role, right? Sometimes maybe underestimated.
Oh, absolutely critical. And yeah, sometimes underestimated by founders.
So how does Bussgang explain their function, and what kinds of personalities should you expect on your board?
Well, fundamentally, the board represents the shareholders. They're legally empowered to hire and fire the CEO, approve major deals. Pretty serious stuff.
Right.
Bussgang playfully categorizes board members like judges on American Idol, which is actually a brilliant way to get it.
Okay, I'm intrigued. Like who?
So you've got the domain expert, think Randy Jackson, full of industry knowledge, connections, the yo dog, here's the deal type.
Okay.
Then there's the cheerleader, the Paula Abdul, always offering encouragement, boosting morale, finding the positive.
Need some of that.
Definitely. And finally, the truth teller.
The Simon Cowell.
Okay. Brutally honest.
Brutally honest, sometimes hard to hear, but almost always right. Cuts through the noise, gets to the core issues, and he emphasizes, right, that while they all have a role, you need that truth teller, even if it stings a bit.
Absolutely invaluable. You need that directness. He shares his own experience with former Senator Bill Bradley on the A Promise board.
Oh, interesting.
Yeah, Bradley's directness apparently spurred the team to execute their business development plans with, like, remarkable speed. Sometimes you just need that tough love to really perform.
Exactly. And a huge takeaway here for you, the entrepreneur, is what Bussgang calls the no secrets, no surprises rule for managing your board.
Makes sense. Keep them in the loop.
Constantly. Proactively. Be honest about weaknesses, about challenges. Actively seek their advice. This can prevent those common soap opera scenarios he describes.
Like what kind of soap opera?
Well, things like the fall from grace, which isn't just, losing favor. It often happens when a CEO repeatedly misses projections, or worse, hides critical information. Eventually, the board loses trust and removes them.
Out?
Yeah, or the high noon shootout.
Sounds dramatic. It is. That describes those intense, sometimes public conflicts between the founding entrepreneur and maybe a professional CEO they hired later, often over strategy or control.
So transparency is key to avoiding that stuff.
Transparency builds trust. And trust is absolutely essential to navigate these complex, high-stakes relationships and prevent those dramatic, often company-ending conflicts.
Okay, so fast forward. You've navigated the jungle, the dirt road, the highway, managed the board. Eventually, every startup and its investors looks for the jackpot, the exit.
Right. Payday, hopefully.
Bussgang lays out the 2 main routes for this, right?
Yeah, pretty clearly.
Yeah.
There's the initial public offering, the IPO, selling shares to the public on a stock exchange.
The dream for many, maybe?
Perhaps. Or, far more commonly, an acquisition, being bought by another, usually larger company.
How much more common are acquisitions?
Way more common. He highlights that only maybe 2–3% of venture-backed companies actually achieve an IPO. The vast majority exit through acquisition.
2 to 3%. That's tiny.
It really is.
Yeah.
And to illustrate the different stakes involved, he uses this really valid analogy, the pig and the chicken at breakfast.
Okay. How does that work?
Well, the VC is the chicken. They're interested, involved, they laid the egg, provided the capital, but the entrepreneur, they're the pig.
Oh,
Fully committed, they are the bacon.
wow. Okay, that really drives home the difference in commitment and risk.
Yeah, it powerfully illustrates the vastly different levels of personal, financial, emotional stakes for the founder. Their life's work is literally on the line.
That analogy really sticks. So we hear about some examples of exits, too.
Yeah, like the strategic sale of Brontes 3D, sold for $95 million,
Nice.
despite having basically no revenue, which just shows the power of valuable intellectual property and future potential.
Right. And then there's Constant Contact. Their IPO wasn't exactly smooth.
No, apparently it was pretty bumpy, but ultimately successful. It shows the path isn't always easy, even for companies going public.
And Bussgang points out that for many founders, an IPO isn't really an exit anyway, right? Like cashing out and leaving.
Exactly. For many, it's more of a significant financing event, a way to get more capital to continue building their vision, expanding the company.
Interesting, like with Sertris, Westfall's company.
Yeah, even after the successful IPO, Christoph Westphal made the strategic call to sell to GlaxoSmithKline. Why? To maximize shareholder value, but also, crucially, he secured a massive $200 million commitment from GSK for post-acquisition funding.
So he could keep the science going.
Exactly, keep his scientific vision alive, just within a larger corporate structure. And looking ahead, Bussgang is actually really bullish on entrepreneurship, even argues that economic downturns can be great times to start disruptive companies.
Why is that? Talent becomes available.
Talent, capital shifts, incumbents might be slower to react, opportunities arise. He makes this compelling case for VC itself as America's greatest export.
Really? How so?
Observing how the model is spreading like wildfire. China, India, Vietnam, often led by VCs who actually trained and got their start in the U.S.
So it's gone global.
Totally.
Yeah.
It's not just a domestic thing anymore. And the industry itself is changing, becoming more transparent, more sophisticated, acting more like a service provider to entrepreneurs.
Interesting shift.
Yeah, continually pushing innovation globally, creating opportunities worldwide. So the game keeps evolving, but those core principles Bussgang lays out, still profoundly relevant.
So wrapping this up, what does this all mean for you listening in, whether you're an aspiring founder or maybe just curious about the forces shaping our economy?
Well, I think mastering the VC game isn't just a how-to guide. It's really a testament to the power of vision, passion, and yeah, those strategic partnerships in building potentially world-changing companies.
Right, from getting that initial entrepreneurial itch
Yeah.
to navigating the complex VC world, managing the board, and ultimately aiming for that exit, hopefully on your own terms. Bussgang really gives you an insider's map.
He does. And the insights into how VCs actually think, the absolute importance of nailing that pitch prep, and those critical board dynamics, it's all invaluable. It doesn't just tell you what to do, but why it works. You get a much deeper understanding of this powerful engine for growth and impact.
It really is about leveraging those relationships, that capital, to make a real mark.
Exactly.
Remember, the right capital and, crucially, the right partners can provide that essential wind at your back. It's a long, hard journey from just an idea to maybe a global enterprise.
For sure.
We really hope this deep dive into mastering the VC game has given you plenty of aha moments, maybe a clearer understanding of how to play this fascinating high-stakes game.
Yeah, there's always more to learn, always more to discover in this whole landscape of innovation and investment. It never stands still.
Absolutely. So if you enjoyed this journey into the world of venture capital, definitely make sure to follow Bookish Dives. We'll have more insightful conversations and surprising facts from the books that truly matter.
Yep, we'll catch you next time.
See you then.